We're going to kick off this video with a very simple question. Have we returned to normal? Is this now an environment that we can start to look at where follow through and staying within about a 68% probability of price movement ranges can return? And that's a big reason why April's been as difficult as it's been. Today is important for two reasons. We're going to talk about both of them here in the video. First of all, we've returned back to 16. 16 is a big deal, not because 16 is some historically important VIX level, but because for the most part, all the great trending action that we've seen through Q1 of 2024 happened with price action between 12 and 16. Sure, we've had a break here and there, but really April has been consistently above and piercing the high end of what was a very normal range between 12 and 16, where trends were behaving very well in terms of volatility and following through very nicely. Higher lows and higher highs. Then came April. This is what really April can be summarized with. This right here is possibly a return to normal action as we fall back down below 16. So it's not about whether or not the VIX is up or down. A lot of traders perceive that to be the important aspect of the VIX. It's really not, unless you're day trading and doing different things. But in terms of a general barometer for the mood of the market, up and down doesn't matter. It's where is it? And again, above 16 is the problem, and below 16 would be the solution then, at least to one of our challenges. So if you recall yesterday, Monday, we had a down day in the VIX, and yet we had a very erratic day in equities. So please don't think that just a down VIX is calmness. As long as the VIX is above 16, we're going to have some higher volatility days and more unpredictability. All right, so I mentioned there were two really important things. Let's get into the second. Here's a second really important thing. Back going into OPEX, price action in a bearish momentum but neutral trend broke the anchored VWAP for the year. That's a big deal. Today, we've emerged back above it. So not only is the VIX heading lower below 16, the ES is back above the anchored VWAP for 2024. Does this mean that we're going to turn back into an uptrend? No, but what this is suggesting is that there's a higher probability for follow through now that we're closing in on a more normal VIX and we're not exceeding the standard deviation levels of our broader averages, which is something we've done quite often throughout April, making this price action incredibly frustrating and difficult to manage. Whether it's up or whether it's down, any kind of trend is great. Uptrends are better, but whether it's up or whether it's down, we need a trend for the best type of trading environment to grow our accounts. And that's what we're all here for. Account growth and consistency. Both of those are going to be more probable in an environment like what we've seen the first step towards here today on Tuesday. We still have plenty of earnings to come. So let's not forget, there's still plenty of volatility coming out of the earnings hot zones that are scheduled over the next few weeks. We've gotten through the financials. Now we're getting to more tech. We have energy coming up. So more so now than ever, it makes sense to understand sentiment. And this was a question that I got in the Simpler Central room, and I wanted to follow up on that here in the video. And that is when I was in the Central room. So this would have been 10:30 Eastern. So this is 4:10 Eastern right now. At 10:30 Eastern, one of the questions was, is the S&P going to keep moving higher? Is that velocity going to keep taking us higher? So at 10:30, that would have been right about, that would have been this candle right here. And I said, not much higher. If we're going to move within our 68% probability, and that is becoming far more likely because the VIX is getting back to 16, if we're going to move within our 68% probability, this is not an area to build a long position, because this is most likely going to be where the selling pressure at least is going to gather. It's not as if we can't move higher tomorrow, but if you were, say, playing a day trade and you bought SPY puts or you bought SPY calls, right? Neither probably are going to do all that much because this is just a fatigue level, right? The calls are going to be better bought down in the gray, while the puts are going to be better bought in the gold. So why not a put, right? That might be a really logical question, Ron. Okay, why not a put? Because these candles are not even bearish. They're not even neutral. They need to be red like this or yellow like that, right? That's the kind of color we need in this zone in order to validate a short. So you'll notice it really didn't go much higher. So this is a poor place to buy a call, right? And it didn't go much lower because these are bullish candles. So the daily price movement range is held, which is really good news. That's a step towards some normalcy. And then again, the VIX moving to 16 is another step towards normalcy. All right, what else do we have? Now, I mentioned I'd talk about some sentiment reads because a lot of folks have been asking, okay, Rog, if I want to put on a swing trade and you just finished up your top tier pro system, what are some of the things I can look for? Happy to help. All right, this is how we want to do this. And this is going to open up the 5-minute chart. Not that I'm necessarily putting swings on with a 5-minute, but the 5-minute is going to give us some very early slices of these tiny little 5-minute candles, very short slices of psychology where I could make some very important sentiment reads from. So first of all, you'll see them listed on the left there. So first thing, what are quick and easy ways? Are we above or below the previous session close? Right? Are we above or below the previous session close? We spent the entire session above the Monday close of 50.49. Now, mind you, while all this is happening, the VIX is dropping, and we really cannot underestimate the importance of that. The next thing is, at 10 o'clock, are we breaching the clearing range? Yes. Are we breaching it sometime after 10? Yes. What about the initial balance? At some point, are we breaching that thing sometime after 10? So these two breaches, that's the clearing range breach, that's the initial balance breach. Check, check. So previous session close, check. Initial balance and clearing range, check. What about today's VIX move? We talked about that already. So as the VIX is falling, that's especially not just falling, but falling below 16, right? Very important. We should see trends resume, more follow through, less moves to those standard deviation extremes. This is great. What about early cues to follow through, right? So now that the VIX has dropped below 16, if it stays there, how can we take an early read? Early reads, meaning anything, early to me is anything before 10 or even 10:30 a.m. Eastern. Really early is before 10. Don't fight the previous session close. That's one thing I'll say. Don't be bearish if we're above the previous session close. The next thing is, where are we in relation to a 9:30 anchored VWAP? Don't be bearish if we're generally staying above the 9:30 anchored VWAP. So previous session close, anchored VWAP. Another tool that I use that's specific to the Sector Secrets Mastery in my top tier pro class is, where are we in relation to the 200 propulsion? Right? That's another thing I would say. And if you don't have the 200 propulsion for my class, use the 200 propulsion that I've made freely available, the old TOPS version. That's fine too. It's better than nothing. All right. And one thing I've really got to mention as far as today goes, look, I was not expecting this kind of day. I was expecting bullishness, but not this level of bullishness. Let's face it, not every day is going to be driven by technicals. Right? Sometimes those technicals and price and volume and volatility are going to be driven by external factors like data. Today's hot zone, the flash manufacturing and flash services PMI, if you look at where everything woke up and then sort of never looked back, it was at the 9:45 candle. So flash services came out at 9:45 a.m. Eastern. So we're kind of moving around, moving and grooving. Here comes that data. Boom, off it went. All right. And the reason for that has to do with, are we still in an environment where disappointing data is bullish? When it comes to inflation, it can be. And in this case, this is not a common inflation metric, but the PMI, if it's at or below 50, that's presumed to be bad, right? This one came in just above 50. It was expected to come in around 52. So the other metric around inflation is, while trying to get to an inflation target and see it stabilize, is the Federal Reserve breaking the economy? And something like the flash services PMI and the flash manufacturing PMI coming in lower than expected is bad news, acting bullish. Look at the way in which volume Volatility and speed kicked in shortly after 9:45. So sentiment put us on the right side of things, being above the previous session close, being above the average volume-weighted average price, being above the 200 propulsion. All those put us on the right side of sentiment. And then the breaches just continued to confirm that sentiment was still dominant. So think about those sentiment reads. The two most important reads on any chart are trends and sentiment, right? Those to me are the most important. And if you can measure sentiment, like I talked about here, and then measure the trend with, say, the multi-structure, or even my old multi-trend, look, whatever you want to use, both are great. This will factor in participation in a far better way than the traditional TOPS multi-trend. But either one is going to give you an unbelievable advantage over the average trader who doesn't look at structure. Okay. The big thing is now with the Top Tier Pro system, are we able to contend with the influence of algorithms, 0-day options expiration, retail participation like we've never seen before? Yes. But whether you're using the updated, right, or evolved set of tools or the classic, look, 30 years the classic built my career, right? They're still very powerful. Whatever you're doing, take a look at these sentiment reads. Most of these don't even need any kind of proprietary indicator. Make them part of your process. That sentiment will give you a wonderful edge. And sometimes that's going to be what precedes the trend itself. All right, gang. Thanks as always for watching. Thanks as always for smashing the like button. And I will see you all in the next update. Be good to each other. Hey traders, Raghi from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.